Term versus permanent life insurance. How do you know which one is the right one for you so you don't get screwed? That's exactly what you're going to find out in this video. And you're going to want to stay tuned until the end so you can learn how you can get your hands on a valuable resource that will help you not only avoid getting screwed, but also take advantage of the type of life insurance contracts many rich people and even some of the biggest companies use. And by the way, if you want to be sure you're not getting screwed when it comes to all areas of your money and learn how you can pay off all of your debt and build tax-free wealth with the same dollars at the same time, subscribe to our channel and ring the bell so you'll be notified when we publish new videos. Hi, I'm Tony Manganiello, best-selling personal finance author. Since 1995, my business partner and I, John Commuta, have taught over 3 million people how to accumulate real wealth. And accumulating real wealth means you're making smart decisions with your money. And believe it or not, that applies to what kind of life insurance you choose. The secret to buying life insurance isn't to buying term or permanent insurance. The secret is to learn 3 simple facts on how to combine them so you can build a life insurance contract that pays for itself and pays you. The first simple fact is that term insurance is cheap and temporary. Yeah, I know. Big surprise, right? But a fact that may surprise you is that less than 2% of all term policies will ever pay out. That fact means that there's a better than 98% chance you're going to outlive your term insurance. And what that means is you're going to pay thousands of dollars for nothing. Your reward for living is to wind up with a few grand less in your pocket. That's not being smart with your money. The reason most people buy term insurance, though, is because it is cheap and it gives them peace of mind. But that peace of mind is only temporary, and it begins to dissolve real fast when you're getting older and you're approaching the end of that term, and you realize to replace that coverage can cost like 10 to 20 times more, even if you're in good health. But term isn't all bad. There is a way to use it that provides a very significant lifetime benefit for you and your future, even after that term expires. Simple fact number 2 is that permanent insurance, also known as whole life or cash value insurance, costs more than term. Yeah, I know, another big surprise, right? But there are 2 primary reasons why it costs more. Reason number 1 is you can't outlive it. That's why it's called permanent or whole life insurance. Unlike term insurance, a permanent insurance policy will pay out as long as you make your premium payments. Term insurance only pays out if you die during the term, even if you've paid all your premiums. And like I said, less than 2% of term policies pay out. That's why it's so much cheaper. The second reason permanent insurance is more expensive than term is because you're not just paying for a death benefit. Part of your premium is applied towards something called cash value. The cash value of a permanent insurance policy grows tax-free and can offer significant benefits. The typical permanent insurance policy, however, well, it performs rather poorly when it comes to the return on the cash value. And this is why there are a number of financial gurus that demonize permanent life insurance. Most of the people buy what I call an off-the-shelf permanent life insurance contract, and that's the kind most of the gurus demonize and claim is a waste of money. Well, in some ways they're right. The off-the-shelf permanent insurance cash value is limited for growth because of the tax advantages. And when it comes to taxes, you know who gets involved, right? The IRS. The IRS has limitations on how much cash can build inside an insurance policy, and that limitation is based on how much death benefit that policy carries. When it comes to the debate over term versus permanent life insurance, if you pay close attention, always a battle of the extremes. It's almost always a this or that argument. Let me know in the comments if you think that deciding what kind of life insurance you should buy has always been a decision between term or permanent insurance. The this or that idea is kind of like saying chocolate or peanut butter. Thank God H.B. Reese didn't think that way, right? Being smart with your money means you understand that between now and when you want to quit working someday, you're going to generate a finite amount of income. And when it comes to accumulating wealth, you need to be sure you're getting the most out of every penny of that income, especially when it comes to how you spend money on necessities like life insurance. To do that, you need to have a this and that mentality so you don't get screwed. The smart thing to do is to do what many rich families and even some of the biggest companies do: combine term and permanent life insurance into one contract. And combining both kinds of insurance into one contract leads us to simple fact number 3. Simple fact number 3 is that when you combine term and permanent insurance, you get one of the most powerful financial strategies you can find. This is a strategy used by many rich families, like I said, to tax shelter their money while it grows. But unlike many tax shelters like, IRAs and 401ks that tie up your money until retirement, this kind of insurance contract allows you access to your money at any time for any reason. Here are a few more facts about this kind of contract. Combining a term insurance component on top of a permanent insurance policy means you can stuff the contract with cash and still remain compliant with the IRS regulations. This is money that grows tax-free and is liquid while it grows. And with the right kind of contract, you can use your money for things like paying off debt while it's earning you interest and dividends for your future at the same time. This means your cash value is growing much faster than it would in one of those off-the-shelf kind of contracts that the gurus are always complaining about. And because the cash value grows so much faster, the growth inside the contract begins to pay for the death benefit, and your payments are transformed from premium payments into wealth accumulation contributions. This kind of strategy transforms your life insurance contract into a cash accumulation engine, an engine where your cash is growing tax-free. And by the time you're ready to quit working, this kind of cash accumulation engine will have so much cash in the contract that it will be able to pay you and still grow enough to pay for the death benefit even after you've stopped paying premiums. This means instead of wasting thousands of dollars on a term policy that you'll probably outlive, or wasting money on an off-the-shelf permanent insurance policy where your premium payments are structured inefficiently, your precious hard-earned dollars are being used in the smartest way possible. Now let's take a quick look at how this would work for the Fortunato family. They're the sample family from my book, The Debt-Free Millionaire. The Fortunatos are making $2,575 in monthly debt payments. They owe over $238,000 for their house, a couple cars, and a handful of credit cards. They have 30 years until they want to retire, and between now and then, they're going to generate $1,656,000 in net income. When they combine term and permanent life insurance into one contract that's designed to build tax-free wealth and use it the way we teach, here's what they can accomplish. They can pay off all of their debt in 9 years and 9 months. They can save over $169,000 in interest payments, and they can have almost $50,000 in tax-free cash by the time they're debt-free. But this is just the beginning. Because they want to continue to be smart with their money, they keep using this kind of strategy. And by the time they reach retirement age, they have $1,036,000 in tax-free cash. And they do this with no change to their personal monthly cash flow. Now, if you want to learn how you can accomplish the same awesome results with your personal cash flow, click the link below and find out how you can get your hands on our ebook, The Banker's Secret to Permanent Family Wealth. It will walk you through everything you need to know about putting a contract like this together. And if you think this strategy was helpful, click the like button and let me know. And while you're at it, subscribe to our channel so you'll continue to learn how you can keep being smart with your money. I'd also love to hear from you, so please leave a comment about what you thought was the most interesting part of this video. Or if you have a question about what we covered, let me know in the comments. Here is one final fact I'd like to share with you. In recent years, thousands of dollars have been flowing through your hands, and thousands of dollars will continue to flow through your hands in the years to come. The question is, what is your strategy to keeping as much of that small fortune as possible? Helping you keep as much of your hard-earned money is what we're all about. Thanks for watching, and I'll see you next time.